Okay, folks, so we got to give a violent update on the market and plays. Then I want to present the latest on Mullen, which went up again today some 40% at highs before massively selling off. I'll give my thoughts on why the CEO sold some of his shares halfway through the rally last week, on top of his already pretty damn extensive executive compensation. Usually it's heavily looked down upon to sell shares in a pre-revenue stage before the company starts scaling up in any meaningful way, but a lot of retail traders are saying, hey, you know what, he deserves extensive compensation, and saying otherwise is just short seller FUD. So we'll talk about that. And finally, for the main entree, I want to give my breakdown on one $3 stock that you've definitely heard of before and is getting a lot more attention and likely has an imminent catalyst coming up. Let's get right into it. Markets held on to last week's gains pretty well, seeing some strength until Mr. Powell spoke about inflation being too high and the markets tanked a bit. In reality, he didn't really say anything new, but people had to be blasted with the headlines of, oh, the Fed is willing to take action on inflation, which I think to some extent, along with rising oil prices today, helped the market finish on the wrong side of flat. But the real fun today was in runners. You've seen a lot of spec trading. NRSN was one of the biggest morning briefing winners we've had this year. We briefed on this bad boy 30 minutes prior to market open at a little over $2 a share, and it ended up going all the way up to $8.18 at highs about 2.5 hours later, which is a pretty decent 4x. This is on FDA clearance for their ALS drug to move on through the next round of studies, which is the next step in the long process of hopeful and eventual FDA approval. Now, it's worth noting that I didn't find this before the announcement came out, and I'm not a genie. I found it after it already had jumped 50 cents, and I was looking at this announcement and thinking, well, wait, there's no way this isn't worth more than a 50-cent jump. That didn't make any sense to me because this is a huge catalyst for this company. This Prime C ALS drug that just got clearance is their farthest along product, and this is an incredibly small company whose entire business is built on getting these products through the pipeline and to approval. Their goal is to get something to market as fast as possible. This is the one that is closest to being to market. So logically, a huge catalyst like this should deserve a much bigger reaction. Not to mention, just a month ago, we saw proof of how easily this thing spikes. Back in February, it went from 1.1 to 450 in no time at all. And here, this morning, you had one of the biggest catalysts pop up, and the stock barely really moved in context. So we briefed on it, and when volume caught on and awareness spread, the stock got bought up huge. Now, I didn't think it was going to run up this much, so don't give me too much credit here. I was just briefing on catalysts that I felt had more to run, but still a fun day for the stock, and I'm looking forward to seeing the next catalyst pop up for it. It's worth mentioning that if this catalyst had dropped in January, the market probably wouldn't have rewarded it very much. Probably would have got maybe a quarter of this move, if not less. There's been so many times where the market's given us huge catalysts this year, and even if the stock cured cancer, the market's like, short it! And that's the reality of the market. The goal is to keep yourself informed on what catalysts are dropping, try your best to narrow down which ones are most likely to run, and then you're going to be on the front lines when something runs. In other news, oil was pretty hot today, and I was expecting some strength from energy spec plays like CEI and Indo. CEI was up a bit, Indo was down a bit. Overall, not super exciting. Meanwhile, IMPP, with the unfortunate ticker name, was taken out of commission today by the share offering that they did. Good for the company, but certainly annoying for folks who try to trade energy disruption plays. And a constant reminder that any catalyst runner that runs really fast is going to be a prime candidate for dilution or insider selling. I'm still looking for more moves upward in oil and overall energy. Unfortunately, it doesn't seem like this Ukraine crisis is de-escalating. Okay, next we're going to move on to Mullen. But first, a word from our sponsor. So you and I both know, no matter what Mr. Powell says, that the only thing transitory this year is the value of our hard-earned dollars and the stability of our markets, which is a huge reminder of the need to be well diversified. And even if you've branched into stocks, crypto, and real estate, they are all very correlated with one another. Now you might remember that I mentioned Masterworks in the past, but if you don't, today I want to encourage you to learn more about investing in one of the oldest asset classes known to man: art. Did you know that if you compare the annualized appreciation of art between 1995 and 2021, contemporary art beat not only US housing, gold, global equities, but also the S&P 500? But let's be real, we as retail mom and pop investors aren't going out to the auction and bidding millions of dollars on pieces by Picasso or Banksy. We may not even know which art pieces are best to invest in. Well, luckily now Masterworks solves each of these problems. You can now purchase fractional shares of art hand-picked by Masterworks from famous artists who have track records of appreciation like Andy Warhol, Keith Haring, or even KAWS collection pieces, which I'm personally a huge fan of. And so far, results indicate that they know what they're doing. Masterworks recently sold 3 pieces each for a net IRR of over 30%. Set up your account with Masterworks today with just a few clicks. You visit their website, create an account, browse their artwork, and you can instantly diversify your portfolio today with one of the oldest assets as well as one of the most stable. At the very least, you learn something new. At the very best, you diversify your portfolio. Okay, Mullen. This beast has gone insane. More than doubled in a week and went as high as 418 this morning before selling off. There was some trending news that the CEO had sold some shares taking advantage of the recent runs, but the funny thing is that technically this was already public knowledge already for a few days. But for whatever reason, it was much more widely covered today about midday when the stock was rallying by the likes of Investor Place and other media outlets, which if you actually look at the chart, it corresponded pretty damn well with the sell-off that took it down dramatically. You saw this negative PR about the CEO selling, and then all of a sudden you saw a lot of selling pressure and really, in my view, short selling pressure. I'm just gonna say there are a lot of swamp creatures on both sides of this play. Take that as you will. But according to filings, he sold about 200,000 shares at prices around 165 to 166 last week, which was after the stock had already went up 3x as retail traders tried to step in to save it from the short sellers. And from a CEO that says that Mullen has a bright future, it's simply not a good look to be selling shares, any shares, pre-revenue and before they've even meaningfully accomplished anything that investors have invested into. No, a decent prototype and some battery speculation isn't enough of an accomplishment. That is a pre-accomplishment. I made a video a while back that quite frankly a lot of people thought was in poor taste, where I explained how the stock market can be pretty damn predatory because founders, early comers, leadership have two big ways to cash in huge on a stock. Number one, by cashing in on investors by selling a good story. Or number two, by cashing in on customers by building an actual good business. One of them, you're in the business of just selling investors that you're going to create a business. And the other one, you're in the business of actually building a business that serves customers and gives them what they want. It doesn't matter what way you look at it. If you sell shares before you get to number two, you are to some extent cashing in on the story. And the thing is, it's so much easier to sell a story than it is to sell a good business. And the truth is that if you can get people to buy up your stock on story alone, you could sell out and take profits and then just let your investors take on all the risk of whether or not you're successful. Who cares if you're even successful? You already made all your money just in the salesmanship. Now, I don't know what the reasoning behind the CEO's sales are. And some people say, Charlie, he did sell halfway through the rally last week, but he only sold 2.4% of his shares. And this is only the second time selling shares this year. I mean, it's already been 3 months of the year and he's only sold shares in 2 of the 3 months. But full stop, when you're running a company that's likely on the verge of a liquidity crisis, hasn't achieved any of its main objectives, and is the subject of predatory loans, it's inappropriate to sell a single share. But you look at the filings, it seems the entire company is set up to reward substantial compensation to the people at the very top, which again would be acceptable in some sense if they were already far along and getting huge results. The problem is that it seems like the compensation is prioritized over the actual success of the company. In fact, just the last 2 years, the CEO has been compensated a combined $35 million in salary plus bonus plus stock awards. And effective July 1st, 2021, the compensation committee approved an even better contract. Shocking, I know they approved it, who knew? And he will now receive an annual base salary of $750,000 plus incentive compensation of 1 million shares of common stock each year. He is also entitled to reimbursement of $500,000 per year. But it gets worse because if you look at the severance cost, the company is forced to pay out 10% of the company's market capitalization to Mr. CEO upon termination. I haven't seen that one before. At the end of the day, it seems like no matter what way you turn, the CEO is guaranteed to make a ton of money from this. Yet he still wants to start dumping shares. And we haven't even talked about a lot of the other leadership. And if he's willing to sell at 160-ish halfway through a rally, who's to say that he's not going to sell as it goes up more and more? And who's going to say that those catalysts aren't going to drop 2 days later and cause the price to go boop, boop, boop? When a CEO sells, you usually get about 2 days before the filing comes out. And more importantly, if we're talking about direct impact to stock price, CEO obviously sees the price is rallying. Who's to say he doesn't want to go and dilute massively now when he can get a bigger price for his shares? On one hand, I see some seriously predatory short selling and perhaps even coordinated media campaigns. On the other hand, I'm obviously not a huge fan of this company. I'm just not sure which is the worst swamp monster. At the end of the day, this stock will run until people lose interest or the company makes a move that is so dilutive that prices get destroyed. It's up to you to weigh the risk versus reward, but whatever you do, make sure to have a very, very tight risk management plan. Okay, next, so ticker BBIG has been staging an attempt at a comeback, and it's picking up steam in retail interest. We haven't talked much about new opportunities in the stock since last year, but let me go ahead and give you my updated due diligence on it. Here's my spreadsheet breakdown. So BBIG was, of course, a hot momentum and short squeeze candidate stock in 2021. It got killed in the risk-off environment, just like most short squeeze stocks and most stocks in general. But as of late, it's been attempting a nice comeback. They own 80% of Lomotif, which is similar to TikTok and has hundreds of millions of downloads and tens of millions of monthly users. Lomotif is trying to fill a space dominated by companies like, again, TikTok, which is valued at 50 billion, and Snapchat, which is valued at 57 billion. BBIG's total value right now, the entire company, is at 288 million, and that includes not just Lomotif, but other ventures that BBIG owns. So in some sense, if Lomotif achieves just 5% of the success of TikTok, that would earn Lomotif a $2.5 billion valuation, of which 80% would be owned by BBIG. Again, BBIG's total value right now is only 288 million. So if they do succeed in any big way, shape, or form, then there's a lot of rallying potential for the company. And people see that as a unique opportunity. I see it as growth is much easier said than done. But so far, Lomotif has been doing pretty well. They increased their average monthly community by more than 400% in the last 3 years, according to Zash. They have significant presence already in Brazil, West Africa, and parts of Asia. They are looking to expand presence in Latin America, South America, and Europe. And some recent developments that promote Lomotif's continued expansion are their Snap integration, Facebook integration, push into India, social media awareness campaigns, positive PR releases by Variety Magazine and Fortune, and some music festivals and TV presence. They also purchased AdRiser, which helps them monetize Lomotif and can incentivize creators to upload on its app. They also own Cryptide, which encompasses different blockchain and smart contract projects. Like, for example, they run NFT.com, which is a streaming music NFT platform. The first NFT created sold 1 million copies in 57 seconds, which apparently was from a Canadian rapper named Tory Lanez. They also run an AR and VR metaverse project. They also run CW Machines, which are consumer-focused Bitcoin mining solutions. The goal is to provide customers with what they need to start mining themselves. Interesting idea of selling the shovels instead of digging for gold yourself, right? But anywho, to really understand BBIG, you have to understand the big holy grail catalyst it has. And that is the Holy Cryptide spinoff. We talked about this a decent amount back in the fall, yet it has continued to get kicked down the road more and more. Now, how does the spinoff work? Well, for every 10 shares of BBIG, you get 1 share of Cryptide via the dividend. The play is that BBIG has heavy short interest, and shorts are responsible for paying dividends on shorted shares. Thus, the speculation is that some shorts will choose to cover prior to the record date to avoid paying out the dividend, and others will be forced to buy if this catalyst brings enough positive momentum. But also importantly, retail traders and many BBIG bulls feel there is substantial evidence of synthetic shorts, and the rush to cover fake shorts is something that a lot of people think is going to cause a massive rally and a massive squeezy McSqueezy. That said, as of right now, we're waiting for the record date and the date at which this Cryptide spinoff is going to occur, and we don't have that information yet. There's also some gamma squeeze anticipation before options dated to expire on April 14th expire. So what are my thoughts on this play? Well, usually the majority of retail heavy stocks movement is driven by retail buying it on speculation of a catalyst, not the catalyst itself, which is important to keep in mind. But it's also kind of the point when it comes to setups like this. If enough retail traders rally shorted stocks up and create insane risk around certain sets of catalysts while there's also a lot of short selling, it can certainly induce others to cover and cause a massive squeeze. And if you look at the last year plus, BBIG has had plenty of evidence and opportunity after opportunity where you've gotten massive pump and dump squeeze rallies, and now you're trading at the lowest quartile on the chart thanks to the risk-off sell-off that we had earlier this year. It's an interesting play if you look at it from a trading momentum standpoint, especially if it continues to see this level of retail interest. I think the fundamental case overall is fairly weak, but if you look at it from a technical standpoint, I mean, you have a lot of upside, you have a lot of short sellers who want this down massively, you have a clear catalyst coming up at some point, and you have retail watching it heavily. Those things coming together could set this up for another massive rally. Anyways, folks, that caps off today's video. I do want to thank Masterworks again for sponsoring us. Link down below. Learn about investing in some art. And if you're looking to learn how to trade with our step-by-step lessons, private chat, daily morning briefings, private chat, and of course, full price target list, I'll go ahead and put a link to ZipTrader below. Coupon code NEVERGIVEUP will get you a sizable discount. Have a good one, folks, and I'll see you in the next video.